Hi folks, welcome back to the channel. JD here again with a, well actually the first of three finance related videos. Thank you so much for the continued support. I really enjoy getting your emails, getting your questions. It's really nice to know that this tiny channel is actually making a small difference to some of you in terms of the way you look at buying a car, the way you finance a car, whatever it might be. So I'm really pleased. So please do keep the emails coming in. What I'm going to do today is, as I say, one of three. This is the first of three videos. I'm going to make them all in one go, but I'll probably release them over a few days. Someone emailed, thanks for the comment by the way, thanks for the email, suggested that we perhaps take a look at some more affordable cars. And I appreciate that a lot of the finance deals I've looked at in the past have been, you know, premium brands, Porsches, BMWs, etc. So what I thought I'd do is take a totally random look at a car supermarket, again no affiliation with anyone, and we're just going to pick a car at random that retails for about 5 grand, one that retails for about 10 grand and one that retails for about 15 grand, and we're just going to look at the standard finance offer and kind of pull it apart a bit. We're going to assume that we could beat that rate a little bit, because I know that, you know, often if you ask, it's always worth asking, you can knock a few percent off the APR. And then we'll have a look at the spreadsheet and we'll compare it with a straight HP on a personal loan or whatever. So usual kind of stuff. Okay, so as I said, this is totally unplanned, so it's not rehearsed. Not that any of my videos are rehearsed. You may be surprised to hear, but let's just take a look. So here we are at Motorpoint. Let's pick a car. I don't know. What should we go for? Let's go for all makes. How can I choose by price? Yeah, let's just do choose price. Here we go. Right, let's choose a car at about 5 grand. So there we go. Let's take the very first car. A Suzuki Celerio, is that? Suzuki Celerio hatchback, 2017, 67 plate, petrol, manual, 15,000 miles, and it's retailing at 4,799. So there's a good starting point. Okay, so let's have a look at this. So let's have a look at their finance. So if you look here, they are saying, now, straight away, look, what was I saying last time, and I've said it many times before, is it a 48-month agreement or is it a 49-month agreement? Is it a 35-month agreement? Is it a 36-month agreement? That didn't make sense. Is it a 36-month agreement or is it a 37-month agreement? Now, in Motorpoint's case, look, they do a 4 years plus 1. So this is kind of, I usually call, you know, term minus 1, which is where you have 47 equal payments a month, 48 being the final value. In Motorpoint's case, look, they're doing 49 months. So that's important when you're comparing like for like, because you might go to a different place where they're saying, you know, we can offer you this on a 48-month PCP, and it might be a tiny bit more expensive, but that might be because they're doing it on 48 months and another company such as Motorpoint is doing it on 49 months. So obviously you've got an extra month's payment to make. So again, let's just make sure we're comparing like for like. So let's take this. There's a 49-month agreement, so 48 equal payments of 84.85 with a final option of 15.29. They also have this £99 pre-delivery fee. They certainly used to say that was optional, but let's just assume we have to pay it. 6,000 miles a year. Let's actually change the deposit to nothing to make it easier. There you go. So nothing, coming out £96.90 a month. So if you're the kind of person like a lot of car companies like you to be, where you only consider the monthly payment, you know, you say, well, my budget is £500 a month, and they work it to that. If you were to say, oh, well, I want to pay £95 a month on a car, you'd be going, happy days, that's pretty good. And it is good. You know, let's be honest, it's £96 a month for a 2-year-old little car. You know, you can't really argue with that, can you? But I'm sure we can make it cheaper. So they're saying £96.90 a month, £15.29. There's a £10 purchase fee. But look at the interest. So the total amount payable, this is the important figure for me. The total amount payable for that car, regardless of what it's costing you a month. Let's compare the purchase price with the total amount payable. So let's assume we have to pay the £99. and I don't know whether you do, because I think it is optional really. Well, it certainly used to be. It's 4898 and we're paying 6180.20. So we are paying £1,369 on that car. Let's just plug it into the spreadsheet. Again, as usual, link to the spreadsheet video here. Email me here if you'd like to know how you can get your hands on a copy. Okay, so total cost was for, what was it? 4898. So 4898, zero deposit contribution. Guaranteed future value was 1529. Starting month we'll say is next month, so that's June 2020. APR is 9.9. Equal payments 48. This is important again when you use a spreadsheet. That means equal payments. So if it's 49, as in this case, it's going to be 48 equal payments. So 48 equal payments. It's coming out at 97.90 on the spreadsheet. They've got it at 96.90. So we're not far off, are we? So like I said last time, just compare it. Now the spreadsheet is telling us the total charges over term are 1330. They've got 1369. That's interesting, isn't it? So we've got total amount payable 6228. They've got 6180. Total interest 8930. 1529, 4898. Let's just check it all. Okay, it's as near as we can get it, pretty much. So anyway, 9790. Okay, so you think, as I said before, that's a good, reasonable, manageable monthly payment. You could VT after just under 32 payments if you wanted to. Let's just see what would happen if you could negotiate this APR down to 6.9 rather than 9.9. There you go. Look at the difference. Now, yes, it's come down £8 a month. But £8 a month when you're only paying 90 odd, it's quite a significant ratio, if you like. At 6.9, our total charges, have dropped to £917. Total amount payable, 5815, as opposed to 6180. So we've saved a good £300 or £400. So that's why even on a tiny little deal like that, if you can shave a few percentage points off the APR, you're going to actually save quite a bit. What we'll do now, oh, hang on a minute, I've just noticed something. Look at these other things you could add on. Motorpoint asset protection, gap cover. Okay, so they want £8.26 a month for 3 years. So what's that going to cost us on this little car? £8.26. 26 times 36. 300 quid. That's not silly money. That's not ridiculous, to be fair. That's quite reasonable. I mean, you're not going to have a very high claim limit, are you? You're not going to need more than, what, £3,000 claim limit maximum over the period? You probably would find it cheaper online, but that's not silly. I certainly wouldn't have the Williams paint protection. You know, as I've shown you in a few previous videos, I'm quite into detailing, and you can certainly buy some products and do it yourself for a lot cheaper than that. And who knows, as I've said before, I'm not doing them a disservice, but are they going to spend a good day on that car? Are they going to clay bar it? Are they going to iron fall out it? Are they going to wash it with 2 buckets and a grit guard? Are they going to spray it with tar remover? You know, are they going to do all this prep first? Are they going to give it a single stage machine polish before they apply it? I would expect they would for £8.26 a month for 36 months, but who knows? Anyway, last thing before we move on to the next video, a £10,000 car. Let's see what it would cost us if we could get the best loan currently, personal loan, at somewhere like, I don't know, Sainsbury's Bank. So I haven't looked, let's have a look. Sainsbury's, oh, can't spell. Sainsbury's Bank. Loans. Okay, how much do you want to borrow? Let's put, I don't know whether we can put the exact amount in, but we'll try. 4898. It won't let me, oh, we can't type amount in. We'll have to borrow £5 but we'll put it in the spreadsheet as well. We'll do it over 48 months. Now you see, that's interesting, isn't it? Because they're quoting 6.9 because we're borrowing probably under, yeah, 7,500 look, you have to probably borrow to get their decent rate. But even at 6.9 lot over 4 years, it's costing you what, £20 a month more. Total amount repayable 5.7, because remember you haven't got that balloon payment at the end. So with a straight HP, you're paying it the capital down much more, which means you're saving interest. On a PCP, where you've got that constant value at the end, you're paying interest on that for the whole of the period, if that makes sense. So on a loan, it's going to save you, compared to our PCP on 6.9, we're going to save another 100 quid over the term. It's £20 a month more, but at the end of 48 payments, you own the car. At the end of it, in this case, you've still got to find 1,529 quid. So food for thought there. Okay, so that's the end of part 1. Thanks for watching. Please comment and subscribe. I'll see you shortly for part 2. Thanks a lot.